Hi, this is Mike Maloney, and I'm joined by Jeff Clark. Once again, we got a lot to discuss today. Jeff, how are you doing?
I'm doing great, Mike. It's good to be back with you, of course. Yeah, we got lots on the plate here. Article of the day, tweet of the day, chart of the day, some wonderful viewer feedback, and also a great quote of the day from Will Rogers that Mike is going to read to us. So let's jump right in. This first article is our news of the day item, and it's posted on Zero Hedge, but it was written by a banker from Rabobank, which sounds like rob a bank. I've always thought of it that way. But anyway, he's pointing out here that when it comes to the inflation measures of the CPI, the Consumer Price Index, Mike, he's claiming that it's actually more politically motivated than it is economic motivated. And the example he uses here is with real estate. He actually refers to several examples, but one is real estate. Real estate prices in the US are up 11% year over year. And in Australia, they're up an incredible 30% year over year. And none of that is included in the CP. What do we call it, Mike?
The CP lie. I came up with that for my book, the CP lie, because it is. I mean, they don't track the same exact set of goods and services that they've been tracking since the 50s. And they've done replacement, and then they do hedonic adjustment. We've covered all that before. But what I'm amazed, they're talking about Australia, and Australia has gone nuts. I did a piece. Hopefully, we can stick the link in the notes below the video here on the Australian real estate bubble. I had written about it to put it in an upcoming book, and but things were changing, and it's changing so fast. I decided to cut that chapter. It was too long anyway, that piece. And so I made a video of it. And it just shows you the craziness of the economics behind what they're trying to do in Australia with real estate. Now, recently, about, I don't know, a month or two ago, Dan, our producer, sent me an article where the Australian government is now offering a $50,000, grant to any foreigner that'll come in and buy residential real estate. And what amazes, so this is mostly like the Chinese. The Chinese have been investing in Australian real estate very heavily. And so they're trying to attract more of them. They want these Chinese buyers because China is having a boom now. We've had this contraction because we closed down our economies. China reopened their economy right away, and they're having an economic boom. Australia is trying to attract capital, and they're successful at it by giving $50,000 to any foreigner that'll come in and buy a house. Well, the Australian population isn't asking themselves, you mean I have to pay taxes so that they can give it to some foreign buyer who's going to bid a house up away from, like, for instance, if you've got children, don't they need a place to live? Don't they need a starter house? They're never going to be able to. They're going to have to rent because of these crazy policies driving real estate up 30% in year over year. This is like crazy, absolutely crazy. And so it's worth watching the YouTube video that I did about the Australian real estate bubble, because when this thing implodes, and it's going to implode, this will be when the implosion comes. It'll start in one country, but it's going to be a chain reaction around the world. And what they're doing is they're just going to push this thing to the limits. We don't see inflation in certain areas, but we do see inflation in other areas. I call it indeflation. I do think that there's going to come a day where the market, all of these bubbles in the almost everything bubble, some people call it the everything bubble. Gold and silver are not in a bubble. So it's the almost everything bubble. When all of those other items in the almost everything bubble start to deflate, that's the deflation that I've been talking about for a long time. It's probably going to be global. There will be a contagion that sweeps around the globe. And this is episode 7 of Hidden Secrets of Money. The governments around the world will overreact, and they'll print us probably into oblivion. I don't know. What's your take on this, Jeff?
Well, the CPI for March just came out today, ironically, this morning, and it is all the way up to 2.6%, the highest in at least 2 or 3 years, I believe they said. So that was a big jump. It was higher than expected. So even the U.S. government is acknowledging, with their hedonic adjustments and all that they do, that inflation is higher. So to those that claim that we're still in deflation, they're ignoring the fact that the CPI does not accurately measure it, and yet even it is rising at this point in time. So, yeah, that's
our producer director Dan, he's from Australia. He's from Tasmania, and he was just saying how nuts everything. He's been watching real estate over there in his hometown, and he just said it's absolutely insane. And weren't you telling us about somebody that was putting in bids over the asking price?
Yeah, that's right. It was actually my brother. I'll leave anonymous where he was looking, but it was in a popular area. He needed to buy a home. He was moving to be near some family. He put in a bid over the asking price, and his bid was not accepted. He was outbid by numerous other buyers. So and again, the whole point of this is that none of this is included in the CPI. So
right,
that's kind of insane when you think about it.
That's the thing. When I was writing my book, it got cut from the book, but when I was writing it, I started looking at all of the different measures of inflation, because there's a bunch of them, a whole slew of different measures of inflation that the Bureau of Labor Statistics keeps track of. And they just seemed crazy to me. And my thesis was that every dollar created must go somewhere. And so I came up with something called CUP inflation, CUPP, currency units per person, because you can inflate the savings. You can inflate personal savings. You can inflate the stock markets. You can inflate real estate, but they don't measure those. So they're not getting a true picture of inflation. And the problem is, if you've got an economy that's in balance and you warp the economy by pumping a bunch of currency into one sector of it, eventually the free market wants to balance the economy again. And when it snaps back, it's going to be very, very painful.
Yes, it sounds like some economists in the government, Mike, need to read your book. And by the way, you can still get Mike's book for free. The link's below. And he talks about the CPI in that book. There's a section on it, so you can read it in his book. So anyway, Mike, on to a tweet of the day. This is from a Twitter handler called Documenting Bitcoin. This came out yesterday. He says at $64,000, Bitcoin hit that price yesterday. Bitcoin becomes the 6th largest currency in the world and overtakes the British pound sterling in size in terms of monetary base. And that includes gold. So only gold and 5 other currencies, or that'd be 4 other currencies, have a higher monetary base than Bitcoin. Mike, what do you make of that?
Yeah, well, it's interesting. The chart that was supplied with it, I guess you said that this chart is a couple of months old, but it shows that if it did take over the British pound, that it would actually be the 5th, not the 6th largest currency, the 6th if you add gold into the equation. I think it's amazing. I think it's stunning. I think this will continue. I think it will definitely, it's going to, Bitcoin is on a run, and the world's central banks that feel so threatened by Bitcoin and the IMF and everything, they waited a little bit too long. Now that you've got big brokerage houses and retail, I mean, when you have corporations and brokerage houses and these giant entities plowing hundreds of millions and billions of dollars into this asset, the only way that they could try to, if they wanted to try and make it illegal in the United States, the Fed would have to print the currency to replace it and buy it from them. You can't just, I mean, it wouldn't work in the United States to just like steal the Bitcoin from them. So you've got these major institutions going into it. So at this point, hopefully, it can't be stopped. It is a very wasteful cryptocurrency when it comes to energy usage and the electronic waste that it creates. The interesting thing is that as Bitcoin rises, it tends to drag all of the other cryptos with it. And then there comes a time where all of the other cryptocurrencies, a lot of them, start outperforming Bitcoin. That usually happens toward the end, except I've seen lately several of the cryptocurrencies vastly outperforming Bitcoin. So it's interesting. You know, I've been in it since 2014. And I kept on buying it all the way down to 250. And I kept on, I didn't say to buy it. I told them I was buying, because I was buying every single week and buying Bitcoin at 250 and telling people what I was doing. People were saying I'm crazy. I'm trying to steer people into a losing asset, and it's a bunch of hocus pocus and voodoo. Well, they're not laughing anymore. So,
right.
Yeah.
Right.
Either that or they turned around and they're on the bandwagon.
Yeah, there you go.
Yeah.
Well, if you're liking this video, hit that like button for us there down below, and be sure to subscribe to the channel so you get all our videos. So, well, Mike, on to chart of the day. This is from Octavio Costa, and this is, speaking of Australia, this is Australia's monetary base. And you can see it's just went literally not just through the roof, but to the moon almost, Mike. Look at the monetary base, how it's grown. And what I'd like to point out here, Mike, is look back at 2008 during the great financial crisis. Look what they did in 2008. That was a big jump back then, and yet it pales in comparison to the monetary base that the Australian government is doing now.
Well, in 2008, there was a blip there. And then in 2013, there's a big leap. But then, coinciding with the pandemic, you know, it looks like it was at about 115 to 120, 120 billion. And now it's up at 265. So they've more than doubled the base currency supply since the pandemic began. And, you know, this is not a huge country. The population, I believe, Australia is about the size of California, maybe a little bit smaller when it comes to the population size. I haven't looked at the statistics in a decade, but that's what it was like a decade ago. No wonder real estate is up 30% year over year. I mean, when you pull interest rates down artificially, what happens? Real estate goes up, because that's one of the things that's most affected by interest rates. And then when you create a bunch of currency and you do things like hand out $50,000 at a time to any foreigner that'll come over and buy a house, of course it goes up. And what's happening is all those foreigners that now own the houses get to rent to the kids of that have been, you know, of the population of Australia. All their kids are now priced out of the housing market. They can't possibly buy, you know, there's a few of them, but the vast majority of them can no longer afford to buy a starter home. So they've been priced out of the market to all of the foreigners that now own these houses and get to rent to them. So their rent is going to China.
Right.
I just can't believe that people don't see this. Please watch the episode on the Australian real estate bubble, and then add all of this insanity to the stuff that they've already done, and then try and figure out for yourselves what the results are going to be, what kind of crash is going to happen, because this is going to be a disaster. I'm sorry I'm laughing, but it is, and I really feel sorry for the people that it's going to hurt.
Yeah, it is the everything bubble except gold and silver. You're exactly right about that. Well, Mike, on to some reader feedback. This is really good. I think you'll like this. This is from Chi Lao, if I'm saying it right. My friend and 3 coworkers are buying silver this weekend, and I'll be joining them as well. His mom and his aunt also want to buy silver now. A few years back, this would not have happened. This year is different. What do you think about that, Mike?
Yes, it is. And this difference is something that's increasing. And I have often said, and Dave Morgan, my friend Dave Morgan says, that it will be monetary demand that drives silver to the moon, not investors jumping in and out on it. But when people are worried about the dollar and they're looking at silver as money. And so for me, one of the things that I've always wanted, and, I've got some, I've been writing some cryptos up. They've hit some targets. I'm sitting on an excess pile of cash right now, and I'm about to add to my position on silver. The gold silver ratio is back up in an area where I'll probably buy all silver or mostly silver. And I just want to be ahead of it isn't just a crowd. This is ahead of the stampede, because it will be a stampede. To borrow a line from, I believe, Jim Paplava from years ago, it's going to be like trying to put Niagara Falls through a garden hose. There's going to be a stampede, and silver is such a tiny market.
It is, yes. I remember Doug Casey used to say that a lot too. I don't know who came up with it at first, but that's exactly what it's going to be like. It's going to be a panic into precious metals, and $50 silver would just be a pit stop on the way to higher prices in that environment. So, well, Mike, on to our meme of the day, and this is one I think you like. So why don't you read this to us?
Yeah. First, there's a lot of people people my age know who Will Rogers is, but he actually preceded my generation. He is one of the most popular comedians from the 20s, 30s, and 40s, I believe. And he was a political satirist, most of his comedy. And he was brilliant, and he was funny as can be. And he says, "I don't make jokes. I just watch the government and report the facts." So we want to thank you for watching. I'll see you later, Jeff.
See you, Mike. I'll see you on the next video.
Bye.